This is a 5-part series created from the Military Consumer Toolkit found on military.consumer.gov website. I have taken their toolkit, which is a PowerPoint presentation, and converted it into a 5-part video series that covers the points listed in the toolkit, which are spending and budgeting, earn, borrow, save and invest, and protect. And the series is broken up into 5 parts. Each video has the 13-minute introduction that is the same. So thank you so much for doing this video. This is the introduction to this particular video, and it talks about why the Military Consumer Toolkit was created, its purpose, and how it will help military families, and why this matters so much to the Federal Trade Commission and the military. My family has served in the military. My uncle was in the Navy during the Korean conflict, and my stepfather was in the Air Force for 30 years. My husband was a Marine. My daughter was a Marine, and she served in Desert Storm. I wanted to serve in the Marine Corps, but that didn't come to pass. I'm small and sickly. So, but I just want to try to give back to those I care about so much. And so I put this video together to be of assistance to our military family and friends. So once again, thank you for watching this video. I had a joining forces video in this segment of this video, and I've had to take it out because of the music or something on YouTube. It was copyrighted, so I just took it out. I am saddened to know that the website is no longer active. We still need the resources that was provided by this organization. Even though it was an initiative started by Dr. Jill Biden and First Lady Michelle Obama, it is still needed. I hope someone out there listening to this video will move this wonderful organization to the private sector, all of the businesses and all the people that were involved in the companies. I know there's protocol and everything with various administrations and all of that stuff, but it just is mind-boggling to me that this administration has removed this website and all of the things that were being done for our military families. So if there's someone listening, please do something. Maybe you can talk to Ms. Obama if you're in that area, or Dr. Biden if you're in that kind of area. But this needs to be reinstated in the private sector, in the communities at large. It does not need to be an initiative that can be turned on and off because the needs are not turned on and off. I don't know what I can do. I'm just a lowly retired person, but those that have power, this is one time you could use your power for great things. Absolutely great things. Debt can put you in a cell. It can put your mental life in a cell. It can affect your family, your requirements on the base. It can just have so many negative side effects. And the only way to fix that, the only way to correct it and to get out of the mental anguish of debt is training. That's what this video is all about. That's what the toolkit is all about, to give you the tools and the abilities to get yourself out of the situation and not find yourself back in a mental lockdown because of debt.
I'm Jessica Rich, Director of Consumer Protection at the Federal Trade Commission.
And I'm Technical Sergeant James Mulhern.
When the Department of Defense said that financial readiness is a big part of military preparedness, we listened. When you know how to manage your money and how to spot a ripoff, you're more financially solid. That keeps you mission ready at home and abroad.
That's why the Department of Defense, the Federal Trade Commission, and others teamed up to make military.consumer.gov your tool for financial readiness.
We are proud to offer our uniformed service members and families quick mobile tips that won't slow you down. Want to buy a car, manage your money during deployment, or continue your education? Get started right from your phone at military.consumer.gov.
Before you open your wallet, check out Military Consumer.
For all our members of the uniformed services, knowledge is the first line of defense for you and your family. Visit military.consumer.gov, your tool for financial readiness.
The purpose of this class is to help military families and military personnel to have good tools to make good financial decisions, because wrong decisions can have a long-term effect on family life, mission readiness, and the service members' security clearance. Working with the Department of Defense, the Federal Trade Commission came up with this program, and it's so important because they want you to be able to make solid financial decisions that will not impact you and your family in a negative way. This program seeks to help you answer these questions. Who will handle my finances during deployment? What should I know when buying a car? Often we think that's an easy purchase, but some of those contracts can be detrimental to your finances and can cause you some serious financial harm. And also, can I use my military training to further my goals? As you saw in the video from joining forces, that is very relevant and possible. Why does this matter? Why is this so important? Why does the military seek to help those families and personnel to understand more clearly the concept of debt? It's because of the survey they did and the studies they have found that the average military family has more debt than assets. The purpose of this class is to help you, give you the tools so that you can make good decisions on your assets and not acquire a lot of debt. Continuing with why this matters. The challenges of military life can affect the service member's finances as well as the service member's family. It hurts everyone when things are off balance. Frequent transitions and changes can cause you to have problems straightening out different debts and obligations in one location when you move into another. Many service members have little financial experience. That was my father. When he came into the military, he was taken advantage of. I know of a couple of car purchases he made that really did not turn out well. And the bad part about it, these things have long-term consequences. These things can follow you when you leave the military. This whole program is designed to give you the know-how and the keys of making good, smart financial decisions. What you want is not always what you need. Sometimes that new car is not what you need right now. Maybe you just need to, get a paint job, maybe a little body work and a little engine repair. Because one thing to pay a one-time repair fee is another thing to meet that monthly requirement, that debt that comes every month. Under the spending component of the toolkit, it lists personal financial managers and legal assistance office. These are your resources for the budgeting and managing of your money. This slide lists some of the topics under budgeting that we will cover: developing a spending plan, using allotments, buying a phone, renting an apartment, buying a home, and also dealing with purchasing cars. Continuing on your topics under budgeting, you see I have included vehicle financing and why it's so important to do that when you purchase a car. It's very important to handle the financial part, making sure those contracts are correct. Spending. We all love to spend, but we don't always think about the consequences of the spending. Now, here's some of the features of the Personnel Financial Manager. This is something that's very useful to you. They can provide you with so many things you need: confidential help, counseling, free classes, and some of them that include our money management, credit, military savings, and also you can find classes in there to help you when applying for credit and how to get out of debt, and also applying for emergency financial help. It is so important to take advantage of these resources. And also, they give you free FICO credit scores. And it tells you right here on this slide where you need to contact them. And there is also a phone number here at the end of the slide. The Legal Assistance Office is provided to you as a service member. Under the Legal Assistance Office, you have the opportunity to find assistance for your legal issues in various areas. You have the Service Members Civil Relief Act, and this includes helping you get lower interest rates on your mortgage or credit cards, and some student loans. And it helps you postpone negative actions such as foreclosure, eviction, and repossession, terminating and helping you terminate phone contracts too. So it's also good to help with auto and residential leases and protecting against termination of your life insurance. Now, this protection starts the day you begin active duty and it ends 30 to 90 days after the date you are discharged. But what you have to remember is this is truly legal counsel. All of these wonderful services they provide to help you with eviction, foreclosures, and all of that. You have to make sure, and this is critical, that the contracts or leases that you have signed, that you haven't put yourself in a position for them not to be able to help you. Some contracts and leases and things are binding. You must read before you sign, and when in doubt, before you sign something like this, take it to your legal assistance office and get counsel. Budgeting is something we think of sometimes as a dirty word, but it is not. I have always had in my career payment cycles that were 2 weeks. In the last portion of my career, it has always been 30 days. So you have to have a budget to make sure that the bills that come in the middle of the month or somewhere after the first, you have set aside funds to make sure those bills are paid. You do not spend money until all the bills are paid. And that's what budgeting helps you do. And it requires a certain amount of self control to keep from getting yourself in a bad place.
Every month, Michael ran out of money just before payday. He had to skip paying some bills and pay some bills late. He hated that. So Michael decided to make a budget to see if it would help him pay his bills when they were due. He wrote on a budget worksheet how much money he made each month. Then Michael looked at what he spent last month. He used those expenses to write what he thought he would spend this month. His expenses were higher than his income, which he knew, but now he knew where his money went. He started cutting. He cut money for eating out, movie tickets, and other things he wanted but couldn't afford all the time. That solved the problem and even gave him $50 extra for the month. He put $10 back in his budget to rent movies, and he saved the rest. That month, Michael carefully followed his budget. If he spent more in one budget area, he cut from another. He had enough money to pay all his bills on time. Michael felt much better with a budget.
Now, here's some things that you want to do when making a budget. Making a budget requires life examination. It's sad but true. You have to sit down and be honest with how you spend your money. You write it down. That's what's so important. Writing it out, looking at it, listing all your bills, and it helps you control how you spend, and it helps you see where your money goes. If you look at this screen on the bottom, it says under compare the numbers, it says basically if you earn more than you spend, Well, that's great. Most of us are not there. You need to start building an emergency fund. But most people live from payday to payday. If you have a family, it's all about juggling your money and trying to make it until payday. That's what's happening with most people. If somehow at the end of the month you have a few bucks left, do not say, "Oh, hey, babe, come on, let's go to the movies or something." Nah. Put that little money in an envelope somewhere and leave it in a drawer. You just never know. One of the kids may need some shoes, you may need some extra gas, or a tire may blow. That's rare for most families to just have extra money. If you're just working, and in the military, you probably don't have a lot of extra money, but you have to live on your budget. I cannot emphasize that much. Sometimes when we get into the military, we actually making more money than we did prior to going into the military. And so we have a tendency to spend because you didn't have these resources before. And then the next thing the next slide says it basically spend more than you earn. That's what begins to happen. So then you have to look for ways to cut out. Are you now buying a lot of video games? And the most detrimental thing, as sad as it may sound, is cable. If you sit down and you add up cable and how much money you spend on cable and movies and stuff, you can spend $100 to sometimes $200 on cable packages a month. So maybe it's time to cut back to basic, or like old people over here. I have a Roku. you know, I don't have cable. When I sit down one time and I ran the numbers and I realized that I was spending almost $900 a year just to watch television, I no longer was interested in cable or Dish Network or whatever. So that's an expense that you might think of cutting. I know it sounds cruel, but if your money is tight, some of these things you just cannot afford. So, budgeting requires being realistic about your finances and what you spend. That will keep you out of trouble. In our world today, our phones have the capability of downloading numerous apps for various functions. In this particular slide, we're discussing money management and how to use these apps to do that. You can get these apps from the App Store and other places, but you want to be sure that you download it from someplace secure. Research the app, check into the company, and I strongly recommend if you're getting a banking app that you download it from the bank or the credit union, and pay attention to the various rights that app wants to have on your phone, because you could put yourself in a position where you would actually be in a breach situation because this app would compromise you by how much access it takes over on your phone. So you want to understand the tools that the app provide, make sure that it is secure, and you want to be aware of the cost that the app may cost you, and also you want to be aware of the features that the app gives. Say, for instance, it's a way to monitor your banking account, to check and make sure your bills are paid, to get little alerts to protect against fraud. The app can be a very useful thing, but it also, if it's solely designed to take advantage of your information on your phone, then it becomes a security issue. And also, this particular lesson mentioned something called peer to peer payments. I'm not a big fan of peer to peer, any form of peer to peer, because that's open connection between you and another user. So you must monitor that and make sure that the permissions are correct and that it has some kind of secure pin on it. Else you could compromise your banking account and your personal information. To shop smart is to ask yourself the question: is this a need or a want? Can I live without this? Do I just have to have it? Is it needful for just sustaining life? You need to ask these kinds of questions. So, shopping smart is more than just knowing how to get a good deal, it's knowing when to get that good deal. And what causes money problems is when we look for good deals that we really don't need. So, use your military resources, the commissary, the exchange. Search online for credible information on deals and discounts. But and it says use apps to get the best deal. Yeah, I have app issues. So make sure that these apps you're using are legitimate apps. Get the app from the actual store. I know you can get these apps as opposed to canvas many stores, but sometimes those apps are can cause you to have a security breach on your phone because they literally will compromise your phone. So be sure you know what you're doing when you're downloading these apps, and look for other resources in your community that can help with finances and other little things you need to purchase for you and your family. But the main thing of shopping smart is to ask yourself, do I really need this? Do I really need this? That will help you stop the impulse shopping that can cause debt. Allotments can be a very useful tool when they're done right, but there are limitations to allotments. Some things you can do, some things you cannot do. I would strongly recommend talking to the personnel financial manager prior to, so they can explain to you what allotments you qualify for, what can be used for these allotments. Some things you cannot pay for with an allotment. There are two kinds, the discretionary and the non discretionary. You can get six discretionary allotments, which, for example, cover sending money directly to your bank or for a savings account. So, are there 15 non discretionary allotments, which are ways to pay the government for things like savings bonds, or maybe you had to overdue taxes or a loan from military relief agency, these things, but they will not pay for the things we love to buy, like clothes, furniture, cars, all of this. They will not do an allotment for that. So, my recommendation is prior to you doing any kind of allotment or thinking about how you're going to pay, talk to the personnel financial managers so they can go over your budget with you, make sure you're making good decisions. And my recommendation from my point of view, as I learned from a financial planner, that you do not buy furniture, jewelry, clothes on credit. You just don't do that. Because what happens is, as I learned, these are not assets, they are liabilities. So that jewelry you buy at a jewelry store and you're paying every month for this jewelry, it is not really an asset, it is a liability because you're wearing something you don't own. And if you don't pay for it, they come in to get it. The same thing with the furniture, and you end up with some crazy stuff on your credit report. So prior to purchasing these things, ask them, do they have a layaway? I know that's a dirty word for some people. I have used layaway many times because I did not want to have to spend that kind of money or put it on credit, but it was something that I wanted and at the time didn't have enough cash. So they would hold it for me for like 2 months, or some places 3 months, and depending on how much it cost, and I would pay for it and pick it up. Never buy furniture, clothes, or jewelry on credit. They have furniture you can, they will, furniture stores will give you a loan. Don't do that. Just say, how much is it? And then you ask them, can we do a layaway plan? If they don't, you might want to find another furniture store because you are going to wear the furniture out. A lot of times it's going to be messed up by the time you get it paid for. That's why it is not an asset. Okay, we're going to purchase a phone. Sometimes buying a phone can be a dangerous thing if you're shopping in the wrong place or you don't go into this purchase with the understanding that you're signing a contract that can be very binding, and your legal assistance office may not be able to help you get out of the contract. So this is one of those things you really need to be careful. If in doubt, you want to go to the personnel financial manager's office. You want to do some research. If you just really confused, talk to the people in personnel financial management, or even talk to your legal assistance office because they may have insight into some of these carriers and some of their contracts. With the prepaid phones they have today, most major carriers now carry a prepaid phone. But all of the major carriers, if you get one of those contracts, those things are binding and they can be very hard, if not impossible, to get out. So before buying a phone, there's some things you should get clear up front from the salesperson. One of the main ones is, if you change your duty station or get deployed, can you get out of the contract, or can they end the contract and just let you pay it up, pay the last month and be done? Whatever. You need to know clearly how to do that. You definitely do not want the salesperson, oh, yeah, yeah, yeah. You want to see that in writing. And also, you want to make sure that the wireless provider will provide service in the location where you're going. Or What happens if your mission doesn't allow you to have that phone, or you deployed outside the continental United States for more than 90 days? These are some questions you need to have clear in your mind when you're talking to these folks. So you want to not get caught up in the new shiny phone, but you want to pay close attention to the contract and never believe the salesperson. If it's not in writing and you go to legal assistance, they're going to want to see the contract. So you telling them that the salesperson said this, that's not what's going to help you. They're going to hold you to that written contract. Okay. Do research and consider your options, the things I just mentioned at the very beginning. Make your purchase. In between the research and making a purchase, there's some little things we're going to talk about. One, features. Does the phone have the features that you want? This can control the price of the phone. Next, number of people on the plan. This can either lower the cost or raise the cost. So you once again want to consider this factor. Next, coverage map. Check the coverage map. Make sure that wherever you are, the phone actually works. A lot of times people don't check that, and they'll find that there are many places in where they're living that their phone just doesn't have a good signal. So you want to really make sure. You may have to go to another carrier to get good coverage. Shop around. Can't emphasize this enough. Ask all those questions at the beginning. Look at what you've learned about the features and how much they charge. Look at the different plans and stuff. Then, with that information in your head, you tell them, "Thank you very much, and I'll be back." Then you go to all the other carriers in that area and talk to them about the same things and compare prices. Don't just take the first deal that comes along that sounds good. Ask about discounts. Do they give you a planned discount for having so many people on there, or do you get a military discount, or whatever discounts they offer? Maybe you have AAA and they can give you whatever, but look for any discount you qualify for. Consider a prepaid plan. As I said in the beginning, this used to be a dirty word back in the day. If you had a prepaid phone, you just was not hip, you know. But now prepaid plans have excellent phones. They have good coverage now, so you're not stuck in a bunch of black zones and your phone won't work outside the city limits. Being in the military, this might be the plan to go with because you don't have a contract. You just have to fill the phone every month. Well, I have a prepaid plan. I have a BlackBerry. And I did not want them running my credit because I have a freeze on my credit report. So I did not want the contract either in case I decide I don't like what the services I'm getting with the carrier. So look into the prepaid plans. I'm very serious. Being in the military, this is a very good option because if you get deployed or moved to another location, there is no fallout. There is no comeback or hardship on you. Now, this little bouncy one right here is very important. Read the contract. I know that print is small. Do not sign until you understand that contract. If it's portions in there about you being deployed or you have concerns, take it to your legal assistance department. Let them review it with you and tell you if it's something that'll be okay. Long as you don't sign on the dotted line, you can walk away and make another decision. But once you sign, you can be obligated, and the legal assistance department may not be able to get you out of it if you're deploying. Okay, going on with the buying of the phone. Know your rights. What are your rights to get out of the contract? What happens if the phone is damaged? What are some issues that can come up that may affect you? Read that contract because all of your rights as a consumer is in that contract and your liabilities because that's what they're going to use against you. Ask about cancellation policies. This is so important for you in the military because if you have to leave or go somewhere else, you're going to want to cancel that phone. You do not want to be deployed somewhere or in another duty statement and you can't use the phone and you got to get another phone, but you're still paying for the original phone because you can't cancel it. This is why that prepaid option today in today's market is so good. It used to be a dirty word back in the day, but it's not. Ask about these things. Read this crazy contract. Don't just let people sell you something. Do not sign something you do not understand. You see this little bouncy one here? Do not sign anything that you do not understand. It is a contract and you will be unavoidably bound by it. A lot of people don't understand that. Make sure you know what you're signing. The print may be small. I have a little caveat. If it's point 0.5 font, I figure you're a crook. If it's so small I can't read, I don't want to do business with you. And if it's 900 pages, it's got too many little caveats and legalese in there. So you want to be mindful. Do not sign.
Rachel was ready to rent an apartment. She looked at rental ads online and in the newspaper. She asked her friends if they knew about apartments she could afford. At last, Rachel found a good apartment that was within her budget. Rachel knew she had to apply to get the apartment, so she made sure she had her identification, information about her employer and her income, and details about where she had lived before. Rachel filled out an application and gave the landlord permission to check her credit. She also paid the landlord a small fee for the credit check. But when the landlord checked her credit, he found that Rachel did not have a good credit history. Fortunately, Rachel was prepared. She knew that sometimes people with a not very good credit history have to pay more money in advance. Rachel explained that she could afford the apartment. To prove it, she showed the landlord information about her employer and her income. The landlord agreed that Rachel could rent the apartment if she paid the rent for the first month and the last month now. She also had to pay a security deposit. Rachel signed her lease, wrote a check to the landlord, and agreed on a move-in date. Now all Rachel had to do was figure out how to decorate her apartment without spending any more money.
Okay, renting an apartment or a house. This comes with certain obligations you don't have with living on base. All right, so you want to make sure the first thing you do is talk to the personnel financial manager. You want to talk to this individual, go over your budget. A lot of times you think you can afford it, the rent, but when you factor in all the other things you have to pay, because you will have to pay the utilities, you will have to spend more money on gas if you got to commute back and forth to work. There are other things you have to factor in. They're just not the cost of paying the rent. Getting in the apartment, you have the security department. If, like Rachel, you have things on your credit, you're going to have to pay the first, last month plus a security deposit, and that money can add up. So knowing your budget and factoring all these things in will help you make an intelligent decision. And then once you find a place and a personnel financial manager said, yeah, this is something you can do, then you want to drive by there during different times during the day. Check out the neighborhood, ask around, because a neighborhood is very different during the morning, afternoon, especially at night. Go by through the weekend and see what it's like. It'll tell you a lot about what's going on in the neighborhood. Considering a roommate, you want to make sure that this is something you know what you're doing. My personal opinion is I don't do roommates. I just downsize. I don't pick a roommate until I know I can afford. I would let me just tell the truth. I don't do roommates because if they leave, you stuck and it ruins your credit because you're the primary person. You're the one on the lease. The roommate comes in after you've rented the place. He's on the lease as well. He has a contract. But if he skips out, you're obligated to pay the rest of that money. And if it's like a year long lease, then you can't get out without paying all of that money. Say for instance they leave 6 months after you've been there, and you're obligated to pay that $1,000 a month. He was paying five and you was paying five. Well, now you got to pay the whole thousand. My thing is find you an apartment that's $500 a month. It may not be the ritziest place with the biggest pool, but you don't have to worry because you're the sole person responsible. So if something happens, you don't have to worry. You're more than able to cover the rent each month. You're not going to be found on Judge Judy trying to get your money back after the roommate done left or left a lot of damage in the property. And then run this person's credit check. If you're just going to do this, make sure this individual is employed. Run their credit history. I'm serious. You go to your personnel financial manager, if they're a service member as well, run this individual's credit. Because bottom line is, if they don't continue on the contract, you're going to be stuck because you're the primary person on that contract. So you definitely want to know what you get into prior to making that decision. And once you get in, you want to make sure that you get renter's insurance. You want to get insurance that will protect you in case somebody breaks in and steals your stuff. Yeah, that happens. But the main thing is, if there's, say for instance, there's a storm or something and the window is blown out or a tree limb comes through and all your furniture in the living room is messed up, the owner of the property will have his insurance pay for the repairs to the window. But all of your things in your house or your apartment are not covered by the owner's insurance. They don't cover the people living in rental property. That's your obligation. So that's another expense you're going to have, monthly expense you're going to have to pay. So all of these things have to be factored in before you make that decision. Now, the caveat about renting the apartment, renting the house is the same. Just like you would do in the apartment, you want to make sure that you do your due diligence. You talk to the financial planner, you've talked about the financial part. Well, on this slide, I want to talk about the other component because it both applies to apartment or house. This one, you want to make sure you understand the lease. This applies to apartment or a house. Do a walkthrough. Make sure you understand the lease completely. Make sure you understand when it's due, if you're late, what the penalties are. And the main thing is, be sure that it's all on the original lease contract. Do a walkthrough. If there's little holes and he promises to fix it, the next one says get your landlord's promises in writing. That's that one down here after you move in. But you want to do that before. You want to get everything before you sign anything. It needs to say everything you promised or he promised needs to be in that original document. Usually when you rent a house or an apartment, they give you this walkthrough sheet. You go through, you check out stuff, and you have to sign off on it. So if they promise to fix stuff, make sure it's on that walkthrough sheet and make sure you get a copy of the walkthrough sheet. If you have a problem and have to go to legal assistance on the base, they're going to ask you for those documents. So you want to make sure you keep all contracts and have all that stuff in case there is a problem. And once again, as well as in a house, you want to, or an apartment, you want to have renter's insurance, even if it's in a house. If something happens or it burns down with all your stuff in it, the owner gets the house replaced, but you lose everything. The owner's insurance does not cover you. I cannot say that enough. A lot of people think the insurance on the property covers their personal items, but it does not. So you want to make sure that you got all of this in writing. And as I said before, the renter's insurance is another expense you have to factor into your budget. That is the smart way to go. A lot of people don't do that and they find out when it's too late. So many people don't even understand that the owner's insurance does not cover their personal property. So you want to make sure that the renter's insurance policy covers theft and destruction like fire, flood, or whatever, like a regular homeowners policy, but it's just for renters and it's a lot cheaper than homeowners insurance anyway. But still, you want to protect yourself. So, and also rentals, how can I say this, can ruin your credit. You cannot just walk away and throw your hands up and say, I can't afford this no more. Nah. A rental contract is a legal document. Your legal assistance department will not be able to get you out unless they've done something fraudulent or they're not taking care of the property or something like that. That is a binding contract. And if you don't pay, you get notices to quit, you get all of these evictions. All of that goes on your credit report. So the next time you want to rent something, you're going to have a hard time, and many landlords will not rent to you with all of that stuff on there. So this is part of managing your money, making sure you can afford something, and you can't just walk away. That I can't emphasize that enough. Contracts require you to live up to the obligations. If you do not, there are consequences. Buying a home sounds like a great idea. It gives you certain financial breaks on your federal taxes, it sounds like a really good thing. But if you still really active and you being moved around in the military, you going to different locations and you getting transferred here and there, purchasing a home requires a whole lot of thought because the homes are permanent. The contracts are binding. You want to really weigh the pros and the cons before making that purchase. Renting, you can move at a moment's notice. But if you own that property, you cannot do that. You can leave, but you still have to make that mortgage payment. And now you're in another place and you could find yourself paying rent in one place and a mortgage in another, waiting on the house to sell. Depending on the housing market or where you bought your home, it could be very timely and it could take a long time. So before buying a home, you really need to consider these options and talk to the people in personnel financial management and really weigh that option. If you're getting ready to retire and you got a place that you want to be, that would be the time to buy the house.
There are a lot of costs associated with purchasing a home. When making the decision to buy a home, it's important to know and consider all the different costs that you will pay. There are three basic kinds of costs involved in buying a home: the cost of the home itself, the cost of the mortgage loan, and the real estate costs. The cost of the home itself is the price you agree to pay the seller. Then there's the cost of the mortgage, which is the price you pay to borrow money to buy the home. Lastly, you have real estate costs that include the costs of transferring the property to you, as well as ongoing taxes and maintenance costs. You pay part of these costs up front when you close on your home and part over time. Up front, you'll pay part of the cost of the home itself with your down payment. You'll also pay closing costs, which include both mortgage costs and real estate costs. Upfront mortgage costs include fees you pay to your lender, like an origination fee, fees for services, like appraisal fees and title insurance, and sometimes upfront mortgage insurance fees. Upfront real estate costs include property transfer taxes and other government fees. You pay the rest of the costs over time. The amount you borrowed is known as the principal. Part of the mortgage payment you make each month will go toward paying off that principal. Another part of your monthly payment goes to pay interest on the loan. If you made a small down payment, less than 20% of the home's price, you will also typically pay mortgage insurance. You'll also have to pay ongoing real estate costs, like property taxes, homeowners insurance, and homeowners association dues. These costs can increase over time. For many people, taxes and insurance costs are bundled into your monthly payment, which means your monthly payment can increase even if you have a fixed rate loan. Because there are so many costs associated with buying a home, it's important to talk to your real estate agent and lender and ask them how much you can expect to pay and when.
Purchasing a home is a serious commitment. The cost of the home and the cost of the keeping the home can be two different things. The cost of the home may be $60,000, but can you keep that paid every month? Are you getting a house that's so close to your budget each month that if there's any kind of increase, it will put you in foreclosure? It's easy to buy a house, but it's another thing to keep that house. So when you're considering purchasing a home, that's what you want to take into account. Not what the realtor tells you that you can afford, but what you can keep. The industry recommends that the home not be more than 2.25 times the annual income. If you're making $30,000 a year, they would tell you you can afford a house for 60 or 65,000. the loan should not exceed more than 50 to 80% of the value of the home. And they tell you that the monthly payment should not exceed 35% of that monthly income. So if you're making $30,000 a year, your monthly income is probably going to be $2,500 a month. So when you do the math, it's probably going to be 875 for the house or somewhere in there. So you want to make sure that that's what you can actually afford, and that will not put you in a bind. If it was me, I would recommend purchasing a house for like 55,000. That would give you room for any increase in your taxes or your insurance. It will give you room for increase in fees that you had not predicted for the future. So be mindful. Don't always buy as much house as they tell you you can afford. Give yourself room. It's one thing to buy a house, but it's another thing to keep it.
The financial problem started when I was injured at work. There was no money coming in. I had to figure something out quick.
We received our letter of default around Christmas time.
There's nothing worse than having the fear that you're about to lose your home. The desperation that goes along with that is very intense for just anyone. We did go out to see if we could find some foreclosure prevention companies, but during the conversation and meeting with them, we found out that the first thing that they wanted up front from us was money before we even filled out the application. There's lots of companies that were offering the services and making a lot of promises to us that they could save our home. I really just didn't feel comfortable with them at all, and I just decided to take another path.
There are a lot of companies claiming that they can stop the foreclosure process or help you modify your loan. You should be extremely cautious of people who make any guarantee, ask for money up front, or tell you to make your mortgage payments to them.
I called one of them loan modification specialists. They said they could help. They needed a $500 deposit and then $3,000 after that. They said they had attorneys working on their side. They would talk to the mortgage company. They took my money and they didn't do anything for us at all.
We were desperate to save our house, and I guess that's why we believed in them.
It was just a scam.
All of a sudden on a Saturday night, our front doorbell rings. I open the door and there's this lady on our front step talking at the top of her voice saying, "You're going into foreclosure, you're going to lose your home." Well, I immediately asked her to leave. I then called my servicer and they didn't know anything about her. Apparently it was a scam.
Unfortunately, there are a lot of scam artists out there. Some even look to be affiliated with the government. Their websites have official-looking logos and graphics, and their names include words like federal. Hope Now connects you with counselors that provide free foreclosure prevention assistance.
When I met with the counselor that Hope Now connected me with, I was a little suspicious when I first went in there. I noticed that she didn't ask me for any money. I really felt that there was someone finally here that could help me now. I do believe that Hope Now saved my house. If it wasn't for them, I don't know where I would be. We probably wouldn't be sitting here today.
Our counselor was so professional, I was impressed. She looked at our entire situation and helped guide us through the whole process. Everything that she has done was free, no cost to us.
Time is of the essence when it comes to the risk of foreclosure. No one can guarantee you can get a loan modification or that they can stop the foreclosure process. But if you are in trouble, the first thing to do is contact your mortgage company and get housing counseling. You can do this by contacting the Homeowners Hope Hotline at 888-995-HOPE. The sooner you call, the sooner you can get peace of mind.
It's very scary knowing you could lose your house. You feel like you're all alone in the world. It's hard to know who you can trust, but you can't let that fear lead you down the wrong path with people who might be out to scam you. There are real people offering real help, and they're at 888-995-HOPE.
As you can see from our discussion in the videos, purchasing a home is no small thing. So when you purchase your home with a VA loan, those same programs and same offices are there to help you if you run into trouble. If you into any kind of trouble, they're the ones you should call first. And then the next organization you should call would be your Service Member Civil Relief Act office. They can help you with predatory loans. They can help you deal with all kind of other crazy programs that you may have gotten yourself into. So you want to be mindful that this is a serious obligation. These contracts and all these balloon payments and all this little fine print in some of these contracts, there are very detrimental. So you want to really work with the VA when you considering buying a home. Now, this is some quotes about money I thought was very funny. I like this one. It says, I spent a lot of money on booze, birds, and fast cars. The rest I just squandered. This is German George Best. The next one says, balancing your money is the key to having enough. That's Miss Elizabeth Warren, the Senator Elizabeth Warren. And that is so true. If you budget your money, you will have enough. Every time you borrow money, you're robbing your future self. So when you borrow money and you can't pay it back as you have planned, you begin to find your future budget terribly impacted and things start to go wrong. If there's some type of emergency, everything just comes apart. This is one I really love. She wondered how she could have spent all that money and have nothing but clothes and accessories and a long list of men she never wanted to see again to show for it. This is what money can do. It's not something that we always understand how to handle, but it can have some serious life consequences when it's not managed correctly. Ah, the beautiful smell of a new car. Oh, don't we just love it? It makes everything go well. It just makes the day shiny and bright. I've only had one new car in my life, and I refuse to buy another because I have refused to pay the exorbitant amount of money new cars cost today. So we're going to go on this little journey, and we're going to learn some things about making that purchase and how to protect yourself and get the best deal.
You know what kind of car you want, and you know what you can spend. But don't head to the dealer just yet. Before you shop for a car, shop for financing. Financing a car means you pay it off over time. But you don't have to get that financing through a dealer. Check with banks, credit unions, and finance companies first. Then take your best financing offer with you to the dealers. You can still negotiate and see if the dealer makes a better offer. But if not, you can stick with the financing you already have. If a dealer isn't honest when it comes to financing a car, let the FTC know. Want to know more? Visit ftc.gov/cars. You see the ads. Low price, low payments, no interest, zero down, guaranteed trade-in offers or rebates. Sounds good, but when you get to the dealer, there could be a catch. To get the low price you saw advertised, you might have to make a big down payment or pay extra fees. What about that 0% financing? It turns out you might need a sky-high credit score to qualify. And the extra low monthly payment? Maybe to start, but it could balloon into a much bigger payment later on. Learn as much as you can about a dealer's reputation ahead of time. And when it's time to sign a sales contract, make sure the deal and terms you agreed on are in the contract. You're in the driver's seat. If you can't get the advertised deal or one you feel good about, just walk away. If a dealer isn't honest when it comes to its car ads, let the FTC know. Want to know more? Visit ftc.gov/cars.
As you've seen from the videos, buying a car requires a lot of research. It's not something you just go into and just buy a car in a dealership. That's not smart shopping, as we said earlier in one of the videos. Smart shopping is making sure that you're getting the best deal for what you're trying to buy. And the main thing is to be sure you can afford it. Okay, decide what you can afford. That does not mean just dividing up the payment over 12 months and figuring out what's the lowest amount of money I can pay for this car and make it each month. That's just the beginning. You have to factor in not only the cost of the car per month, but you got to factor in insurance, the down payment, and the upkeep of the car. These are things that you need to know. If you have the car, now you got to pay for gas. Now your insurance is going to go up because you have a new car and a loan on the car. So your insurance is going to go up. So you also want to take advantage of other things before buying. Okay, step two. Determine the worth of your current car. Check out Kelly Blue Book and even Carfax and different places you can call to find out how much your car is worth before you get to the dealership. So you want to make sure you know what you're worthy of, so to speak, what your car is worth. So the offer he makes for your trade-in is something that's actually worth the value of your car. Decide how you will pay. Most of us don't have cash where we can walk in. So that means you got to do your due diligence, like I said in the video. You want to do that price shopping, the financing prior to going to the dealership. You want to know exactly what's involved. You want to have all of this stuff together before you show up at the dealership. Do research before financing. So that's the same thing I said in the other little point. When you decide how you're going to pay, you want to check out a lot of options on financing. You want to check the credit union, different banks. You want to make sure before you get to the dealer, you have financing already. If the dealer can give you a better deal, then you take that. But you want to make sure that what you buying is covered in that contract. Like the video said, no bunch of little add-ons and all this little stuff. So you want to make sure that you do this. So you want to pick a good time. Don't go on the weekend. Go during the midweek. Dealers may be more inclined to work with you because maybe the foot traffic is low or whatever, and they're trying to sell a car today. So go during the week. Midweek, Wednesday probably is the best time. Choose the car and then do comparison shopping. Look around. You have all this information now. Now go to different dealers to make sure that you're getting the best price for what you want. You're not being unfair or unkind or whatever. You're just trying to get the best deal for what you're spending your money for. Take time. Don't just rush into the first deal that comes your way.
You've negotiated a good price for a car, and you have your financing lined up. But it's not time to drive off into the sunset just yet. First, the dealer may try to sell you add-ons. Add-ons are optional products or services, like rust proofing, fabric protection, gap insurance, or a service contract that cost you extra. One important thing to know about add-ons, it's okay to say no, or not right now. It's your money. The more add-ons you get, the more you're going to pay, which might break your budget. Your best move? Read up on add-ons before you even go to a dealer. You might find out that you don't need any add-ons, or you can get them later for a better price. And if there is an add-on you want to buy, don't be afraid to negotiate the price. When you're ready to sign the contract, make sure it only lists the add-ons you've agreed to, at the prices you were quoted. If the dealer isn't honest when it comes to add-on charges, let the FTC know. Want to know more? Visit ftc.gov/cars.
You probably rely on your car to get you everywhere you need to go, whether it's work, school, or running errands. While having a car can be convenient, it can also be a big financial responsibility. You may have taken out a loan to buy it. Until you pay the lender back, you don't legally own the car. And if you stop making payments, the car could be repossessed. What happens if you're hit with unexpected expenses or you lose your job? Suddenly, you may find yourself struggling to make that next car payment. What should you do? Keep making your monthly payments. If you stop, your lender has the right to repossess your car. Contact your lender directly and explain your financial situation. Discuss your options. It's in everybody's interest to work something out. Your lender wants the loan to be repaid, and you want to keep your car. Question companies that say they can lower your monthly payments or stop the repossession process if you pay them a fee up front. By paying them instead of your lender, you could lose your car. Bottom line, work directly with your lender and avoid any company that claims to stop repossession or promises to lower your car payments, especially if they want you to pay a fee in advance. Stay on the right track. Learn how to protect yourself from auto loan modification scams at ftc.gov/cars. That's ftc.gov/cars.
You decide to buy the car. You're all excited. Before you sign, you want to make sure that you have done some things. Make sure you have checked out the car, driven it around, checked it out. You want to, even though it's new, you want to make sure this is the car you really want. So some little tips: you can go to the dealer at the end of the month. A lot of times they really trying to sell cars, but the main thing to focus on, as you saw in those two videos, the previous video before the paying the car payment video, you want to make sure that the price you're going out the door with is what you agreed to. Make sure it's all in writing. This goes back to those contracts about the phones and things. And so that if they're putting something unethical, you will be able to go to your legal resources on base and get that dealt with. But if the contract is binding and you sign some crazy contract because you didn't read the fine print, there's nothing they're going to be able to do to help you. Watch for those add-ons. Read that thing. Make sure everything you have agreed to is exactly what you're paying for. And you want an out the door price. This is something a lot of people don't ask for. This is the first thing I ask people for. What is the price out the door? And they'll go, well, no. I said, no, 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 no. The insurance, if there's insurance required, interest, tax, license, all of this. What is this thing going to cost me out the door? That's what you would end up paying every month for that vehicle or whatever it is you're buying. So the out the door price is very, very, very important. And something else I ask that most people don't ask for is I ask for the total cost of the loan. If the car costs $25,000, and the guy looked at me one time and he thought I was crazy. I said, nah, what is the payout on the life of the loan? Because sometimes hearing that will make you think, well, maybe I really don't need this. If the payout on the loan, depending on your interest rate, is if you got a high interest rate, the payout on a $25,000 car can actually be right around 40,000, depending on the interest rate. So you might want to ask them, what is the payout on the life of the loan? Because it's hard to pay 40 grand for a $25,000 car. So you might want to look at another options, but those are just some things to look into. But make sure don't sign if it's getting to the point that you see that something's not quite right. Because until you sign on the dotted line, you can walk away. Don't be intimidated. Don't let the desire for the new car get you in a position you will regret. Okay, some quotes about money. Look at what Bob Hope says. A bank is a place that will lend you money if you can prove that you don't need it. Sounds crazy, but it's true. Many times we get mad at the bank or the personnel financial manager when they tell him no, you can't afford this, or the bank tells you no, we can't lend you this because your debt to credit ratio is too high, or even you got too many kids. I was told that one time, if you only had one kid we could work with you. So you have to understand that there are rules for lending money, and sometimes they're actually doing you a favor by making you realize maybe you need to budget better, or this is beyond your means right now. So examine what you're trying to do and why you're trying to borrow the money. Are you trying to get out of debt, or are you trying to buy this big shiny car you want that you really can't afford? So don't be mad. Just really sit down and examine what you're trying to do and maybe modify your behavior so that you can have the things you want in the right kind of way. Oh, this is a good one. This is Will Rogers. Too many people spend money they haven't earned to buy things they don't want to impress people they don't like. That is so true. Sometimes we live above our means and find ourselves in serious debt because our friend bought a new car and said, well, you working every day, how come you don't treat yourself? And all of this little crazy stuff people say. Being in debt is no small thing. That's what this program is all about, to teach you how to have the skills to have a good life without crushing debt, to actually have assets and not debt. I used to have an old car and I would get to work. I had a good job, and people would always say, well, when you going to buy a new car? I said, why? Why I need a new car? I said, my old car sits out there next to your shiny new car. And I said, I don't have no monthly note. You do. So people quit asking me about buying a new car. So it's so important for us to think about how we manage our money. And that's what this program is all about. Here's a couple more quotes about money. The waste of money cures itself, for soon there is no more to waste. I don't care how much money you have. If you don't budget and plan, you will soon find yourself without the thing you need, which is money. That's what this course is all about. Teaching you to make good financial decisions which are based on self control, not just buying because you think you can. You should always live within your income, even if you have to borrow to do it. That's the view of many people. When they get stretched for money, they at the payday lending place, or they at the credit union, or they trying to extend their credit cards. That's what we get ourselves into. Sometimes there are emergencies that we find ourselves in that. But if you're not planning and budgeting, if you're going to get a payday loan every week, then you need help. You need to stop, go to the base, talk to the financial planning people, work out a way to get out of that. But don't just get out and continue the bad behavior. You have to be willing to change and control your spending habits. Now we want to buy a used car as opposed to a new car. But the same principles hold true to do your research. Okay, you found a car. You love this little car. Now what do I do? Okay, you decided you want what you can afford, like we did before. You decide what you can afford. Okay, you determine the worth of your current car because you're going to trade it in, just like we did with the new car. Now you decide how you will pay for it. Same thing. How are you going to pay for it? Do your research before financing. That is absolutely crucial. As we saw buying the new car, the same principles apply buying the used car. But you need a little more research when buying a used car. You need to check, a Carfax and make sure this car was not underwater somewhere. It wasn't damaged, but the engine was washed out.
You need a car. Where do you start? Here? Actually, the best place to start researching used cars is online, so you know exactly what you want and what you can afford. The more you know going in, the better you'll feel driving out. At the dealers, there are a few other things to know. Dealers have to put a buyer's guide on every used car. The buyer's guide will tell you if a car has a warranty or is being sold as is. But that's not all you need to know. Ask the dealer to run a car's vehicle history report or get a copy yourself, so you know where the car has been. Ask to get the car inspected by an independent mechanic and check to see if there are any recalls on the car. It'll all help avoid trouble down the road. You have a right to know the facts about the car you buy. If a dealer isn't honest, let the FTC know. Want to know more? Visit ftc.gov/cars.
Okay, so we found our little used car. We all excited. So let's consider. You need to do a test drive. You want to do this more so with this car than with your new car because it is a used car. So you want to take it on the freeway, you want to take it in the city because, as we all know, cars respond differently at high rates of speed. Then you want to spend a little time discussing the warranty with the gentleman or the lady selling you the car at the dealership. Do not buy cars on Craigslist or other places. You are in the military. Unless you buying it from somebody that you know that you can trust, that's selling you a used car, this is something I would not do because the liability can be too great. You can end up with something that really doesn't work. Check the car history, do a Carfax, check Kelly Blue Book, check any resources you can that can tell you about this particular car, manufacturer's website, see if there are recalls or other things on that car. Don't rush off. You're not done. Take it and have it inspected. Take it to a reputable place to have it inspected. Even if you have to pay a little fee, it's worth it in the long run because they will be able to tell you what condition the engine is in, the transmission, and you will have a better understanding of what you're buying. Maintenance records. While it's being inspected, you might want to check to see if they can print out you a little history on the car. Some computers on the cars now maintain history records on did it pass the time for the tune up or the oil change. Check that out. Now you've done all that. So you're standing there petting your feet and you're considering what's going on. You're looking at your notes and you say, oh, it's the wrong color. Or maybe it's got a salvage title. Or maybe the interior looks a little old, but it's got a clean engine and low mileage. These are the things you consider before you sign on the dotted line. Make sure you're honest with yourself about the car. Do you buy and enjoy, or do you just walk away? There's nothing wrong with just walking away after you've done your due diligence and your consideration. That's what it's all about. Stop. Do not rush off and buy something. Take your time because the contract is going to be binding. The buyer's guide on a used car is crucial. That's a little sticker that's on the window that gives all the information about the warranty. As we saw from the video, the used car dealership or even a new car dealership that sells used cars has to provide this. And it can save you money and headaches. So you have the buyer's guide tells you if the car is sold as is sold with an implied warranty, has a warranty, and if it's full or partial, that's very important. It's under the manufacturer warranty. Some used cars still have their manufacturer warranty. Has a service contract available. That's something, if you can buy one on a used car that will give you some kind of protection if it's not too high. The main service contract that I would be interested in would be for my engine and my transmission. Those are the two components depending on the used car's age. And a lot of times, a used car that doesn't seem to be very old or have low mileage could not have been driven very well. Compare and negotiate. Work with the dealer you're buying the car from. Get the information, leave, go look at some other cars, and compare the price and what you're being given for your trade in as well. Now, this one is spinning around. Ask for and keep all documents. When you have a problem and you try to go to get assistance from your legal department on base, they're going to ask you for these things. So you want to make sure you have them. As we've seen from all the wonderful videos and everything we've looked at about buying a car, new, used, we talked about financing. This is closing it up, and we're gonna go over some points we talked about to re-emphasize some things. So let's take a look. One, decide what you can actually afford, not what you want, but what you can actually afford to pay for. Check with your bank or credit union first before you do the loan. We covered that under financing. Make sure that you can get the loan in the right place where you can get the best rate. That comes from keeping your credit good. Your credit score is everything. Do not get credit cards you can't pay for. Pay your bills on time. That will impact what you pay for your car. See if the dealer can beat their rate, not the other way around. Go to your bank first, your credit union first. See what they will give you. Then go to the dealer and see if you can get a special rate with them or some kind of credit insurance on the loan or something that will reduce the rate. Compare loans based on the APR. Choose a loan. After you've done all of that, then you choose the loan you want. Closely review the paperwork. The little spinning one we had before, make sure you read it off. You have to pull out a magnifying glass. Do not let these folks rush you and just give you the paperwork and have you sign it. That happened to me once. Someone presented a legal document to me and said, "Oh, you just signed right here." And it had all this verbiage and stuff on it. I said, "Oh, no. I never sign anything I do not read." The lady actually got offended. I said, "I'm sorry. I'm going to read this before I sign it." A lot of people think that if they can just hit the lottery or get a scratch off or something, and people gamble not for fun, but to try to get out of some financial obligation. And a lot of times people gamble with money for their bills, thinking they can win enough to compensate. That never works. This gentleman, Mr. Bud Post, won $16.2 million dollars in a lottery. And look what it says. Bud Post lost 16.2 million within a nightmarish year. His brother put out a hit on him. This is really called. William Bud Post won 16.2 million in a Pennsylvania lottery in 1988, but was 1 million in debt within a year. It was, what did he say? It was a nightmarish year at the top. What does he say down here? "I wish it never happened," Post said. "It was totally a nightmare." A former girlfriend successfully sued him for a share of his earnings, and his brother was arrested for hiring a hitman to kill him in the hopes he'd inherit a share of the winnings. Money can ruin a family. After sinking money into various family businesses, Post sank into debt and spent time in jail for firing a gun over the head of a bill collector. What is Bud doing? Bud now lives quietly on $450 a month in food stamps. 1 year, this man had his whole life turned upside down. His money basically, his money was gone on stupid projects for his family. His brother tried to kill him. He got sued by his girlfriend. So winning the lottery is not a financial fix if you don't know how to manage money. I watched a program that did a documentary on people who had won large lotteries. And all of the stories were basically the same. They were all broke within a couple years. One family, though, one couple who had won the Michigan lottery, they got their money. They won the lottery. They said they took the phone off the hook. They sat down and decided what they would do with the money. The husband was able to go back to college. They bought a home, paid cash for the house, and they he went back to college, improved his degree, got another job. His wife continued to work because they didn't have children. So needless to say, they knew how to manage that money. They used it wisely, and I'm quite sure they're still doing well. So winning the lottery will not save you if you still do not know how to manage money. So those of you who are looking for the fabulous scratch off, or you pay gamble and do all these things for the hope of getting out of debt, you need to stop. The best way to handle your money is to learn how to handle it, not expecting some way to get out of it without doing your part. That's what this whole program is all about. That's what this toolkit is all about, to teach you that you can manage your money. Thank you so much for watching Military Consumers Toolkit Part 1, Spending and Budgeting. Look forward to seeing you at Part 2. Have a great day.